Hello and welcome to another Trades and Tutorials video. This is Jeff Fish, president of MarketGauge.com, and in this video I'm going to take a look at an ETF that I think you should have your eyes on, especially with the Fed decision coming later this week. In the past couple videos I've talked about ETFs that look like they're bottoming, but this is an ETF that hasn't gotten hit nearly as hard and could be a leader after the Fed makes its decision. But before I go into the specific ETF, if you don't already subscribe to our YouTube channel and you're finding us on YouTube, please do subscribe. And if you've never been to marketgauge.com/tutorials, I think you should visit because you'll find lots of other videos and insight just like this there. And of course, if you don't already know, you can watch this video in HD by changing the settings in the lower right hand corner of the video. So, which ETF am I focused on? Actually, I'm going to talk about two. Now, the way I found this, or stumbled on it, or the way it's been continually brought to my attention, is in the resources section of MarketGauge.com under Little Big View. This is a free area. And then over to Sector Summary. And here we show you how the major sectors, as represented by ETFs, are doing. And we also show you what phase they're in. If you want to learn more about phases, there's a link on this page to do that as well. But if you're not familiar with MarketGauge, we're also really focused on how industry groups perform over a 6-month period, because that has proven to be a very good judge of how they're going to perform over the next 6 to 12 months. So I focus on which phase it's in. So this one happens to be in a bullish phase, XHB, and you can see out of all the sectors, this is the only one in a bullish phase. It's also the only one with a positive percent change over the last 3 months, 6 months. And there's a few that still are positive over the year to date. So my point here is that while everything else has gotten hit pretty hard, this thing has bounced back, actually managed to maintain a somewhat strong trend, which we'll take a look at in a second. So with the Fed decision coming up, I'm not so sure I would be aggressive about establishing new positions right here as we look at the charts. But after the Fed news comes out, you're going to want to look at key levels in XHB and also in ITB. All right, so whenever I look at the XHB, I also look at the ITB, so I'm not even going to bother to try and type that. So let's go take a look at the charts. This is how I found it in the free area of MarketGauge.com, and then we take a look at the individual daily charts. So let's first start with the daily chart on XHB, since that's what brought us here. All right, so here's the daily chart, and the key here is, first of all, as our table pointed out, a bullish phase is when you've got the 50-day moving average over the 200-day moving average and the price over the 50-day moving average. So the key levels that I think you want to focus on here are this resistance level up here, which is the gap high that was put in just last week, and I have the horizontal line to the left showing you that this is really an important level, not just because of the high from last week, but actually made a lot of sense that it stopped there. And this is an area, if you've seen my prior videos, that I like to focus on in general as a pattern. The high before the ultimate high is often where markets will fail. So in a really bullish environment, what we'd want to see is XHB moving above this level, and then the 50-day moving average at that point really should be good support. Another good support level in here is going to be the low of just the other day. This light blue line here is the 100-day moving average. So that has provided somewhat of a swing level, and the green is the 10-day moving average. So just under this 3650 is a good level of support also, and then when you get back even lower, you're talking about the 200-day, which should serve as some support now that we've moved higher. So if I break all that down, I see the scenario here is depending on how it holds. If it holds in here on a negative market, which would be a really logical place for it to hold, you might look to buy a reversal around this area. If the volatility after the Fed announcement contains it within the 200, even down slightly below the 200, you might look for a reversal in there, again with a stop below that level. Or if the Fed activity, whatever the market activity after the Fed takes it higher, this is one that I would follow higher, as I said just a few minutes ago, because the 50-day at that point should offer some good support. All right, so that's why I like XHB. It's one of the sectors that actually has continued to maintain a strong trend in terms of phase, and rather than try and pick bottoms, let's stick with the ones that look like they could be leaders. Now, I said I also look at ITB, and the reason I look at ITB is because even though, as I'll show you in a second, ITB tends to trade very similarly to XHB, it has much different characteristic or much different holdings. So ITB, for example, if you look at the top 10 holdings, you'll find a lot of builders. You'll find Lennar, D.H. Horton, Pulte Group, Toll Brothers, NVR. Those are the top 5. You get a much different list when you look at XHB. So XHB, for example, its top 5 would be Home Depot, Bed Bath & Beyond, Masco, Lowe's, Leg. All right. Now, the other difference is that in XHB, each one of those top holdings is about 3%. So the top 10 holdings of XHB represent about 32% of its overall value. If you look at the top 10 of ITB, it represents 62%. And really, if you look at the top 6, you've got 50% of the index represented, or of the ETF represented. So it's much more levered to the top stocks, at least ITB is. So it's also, in my opinion, much more of a home builders or home construction ETF. So in that way, I'm actually going to favor ITB. I'd rather see ITB break out and move higher and follow it rather than XHB. But it will definitely be much more subject to the earnings of those top stocks because, as I said, they represent a much bigger percentage of the overall ETF. But the levels really work out to be primarily the same. You can see this one got a little bit above its high here, but you can also see that this level is really where it's already trading. So this one's moved up in terms of its relative performance to prior action even better. The phase looks the same. The 100-day moving average provides same level of support. The 200-day moving average provides the same level of support. So these are the same areas that I would look to trade on the downside. This is the same area up above here. I'd look to trade on the upside. If it wasn't for the fact that the Fed was going to have its big rate decision later this week, then I might find a way to get into it with some tight stops before this breakout. But at this point, I think the play should be, let's see how these react to the Fed, and then play them accordingly. Now, the other just illustration I'll give you quickly as to why I like ITB better is the image you saw in the beginning. So this is a chart of the top 6 stocks in ITB over the last 6 months. All right, so starting here, these are the top 6 with the ITB in the big light blue and XHB in the big white and the SPYs in the big magenta. All right, so if we just take a look at the XHB versus ITB, you can see that they track one another pretty closely, all right, or at least they have in the last 6 months. But what's different here is if you look at the leaders, I should say the top 6 again. So you got 3 of the top 6 in this ETF. Really pretty strong and much stronger than the ETF itself. And the other 3 about flat, but still much better than the S&P. Now, before I go to those individual stocks, I did the same thing with the top 6 in XHB. So here's XHB top 6. And you can see you've got one that's really a leader, another one that's pretty much trading right with it, and then a couple that are, well, one that's okay in terms of basically flat on the year. And then other 3 are really not doing well at all. 2 of them are well below even the S&P. So now, again, this is a much smaller, it's literally half of the overall weighting than ITB. And this isn't necessarily the only reason to focus on one versus the other. But if I'm looking for stocks that are strong in this home construction, home builders group or sector, I'd rather focus on the opportunity to find stocks that are strong and going to get stronger. Whereas XHB seems like it's got a lot more stocks that as a group may be doing well, but they're not necessarily all that strong. So probably more compelling is let's take a look at what these stronger stocks are. So this yellow line is Lennar, this red line is DHI, and the green line is NVR. So just to wrap up here, let's take a look at those individual stocks, because by buying ITB, I'm essentially diversifying into those 3. I shouldn't say just those 3, but the top 2 of Lennar and DHI are also both the top weighted. So did I say Lennar? Yes, Lennar. Sorry, Lennar is the top one at 10% of ITB, and the stock looks pretty good. I like this flagging action right here. Now, take out the crash here. It's correcting rather well, and looks like overall a great, healthy looking chart. NVR. This was one of the other ones that really outperformed. This thing is looking great. Now, NVR represents about 7% of the overall ITB. So when I say getting into a strong stock that has maintained its trend, this has been exactly that. And then finally, DHI. Again, very strong trend, still in place. And DHI represents 10%. Right, so I'm not sure how the market's reaction to whatever the Fed says will shake out. But what I am sure of is that this is a group that you should focus on as long as it can hold its 200-day moving average, or if it breaks out to the upside. Hope that helps, and I'll see you in the next video.